Hello everyone and welcome to Staying Ahead of the Curve. I'm Jeff Snyder, Vice President, Senior Consultant with Cammack Retirement Group, and we're here live in Coeur d'Alene, Idaho at the National Association of State Retirement Administrators Annual Conference. And joining me today is Alex Brown, Research Manager, and Keith Brainard, Research Director of Nasra. Gentlemen, thanks for joining us on the show today.
Good to be here.
So Nasra, exciting time. We have all the state systems coming together to talk about retirement issues and pension issues. You gentlemen are going to deliver some very poignant, important information about your research findings. Wondering if you wouldn't mind sharing your thoughts just generally around the retirement landscape as you look in 2016.
Sure. Well, research and education are two pillars of Nasra's mission. And we have found over the years that our members really value and appreciate the continuous feed of information that we try to provide them. And so this year, again, I'll be talking about funding conditions in the public pension community, the factors that are affecting funding conditions, pointing out the wide range of funding levels the public pension plans have, and related factors.
And Alex, you and I have done a little bit on the conference circuit together. You shared some of that research. What are some of your findings that you're seeing in the marketplace in general?
Well, one of the things that I plan to discuss at the session tomorrow is the results of some recent research publications that Nasra has produced, and I might just mention a few of them. We have a recently issued issue brief that we published last month on the state and local government contribution experience to public plans in FY14. This is building on some earlier Nasra research on the public pension contributory experience, where we looked at the FY01 to FY13 range. This year we've added FY14 based on the latest data available, and we show that for most plans, funding discipline has improved in FY14. Another paper that we recently published in June of this year is a paper titled Significant Reforms to State Retirement Systems, where we document the manifold reforms enacted by states affecting groups of public employees such as general employees, teachers, and public safety officers from 2009 to 2014, which we've identified as by far the most active period for pension reform.
So, Keith, obviously we're seeing some improvements in the funding statuses, or at least consistency. Historically, this is a positive trend, obviously, from your perspective?
Well, we're stabilizing right now. We've had a sustained period of decline in pension funding levels after a long, sustained period of improvement, particularly during the 80s and 90s. So it's been a bit of a roller coaster ride recently, and I think that roller coaster ride is likely to continue. Chiefly because of the very low interest rate environment that we're operating in. And as a result, public pension plans continuously are looking to lower their investment return assumption, which creates a real strong headwind with regard to funding a pension plan.
One of the things I really enjoy about Nasra is that sense of camaraderie and that exists between the pension systems. And I'm not sure that the audience really sees that, but people really come together here and talk about their organizations and how their states are funded and what their challenges are. And there's actually like a roll call of states. I wonder if you would take a step back. We might get the opportunity to talk to the director a little bit of Nasra, Dana Bilyeu, but if you wouldn't mind talking about the organization a little bit. I think the audience might find that interesting about how you orchestrate things, how you come together, and what your philosophy is.
Well, I'll start, and then Alex might want to say something as well. As the name implies, Nasra is an organization of administrators or directors who are the individual directors and administrators of state retirement systems. And as a result, Nasra has made a concerted effort to keep its focus on those directors, the administrators. It's not the systems, it's not the plans, it's not the funds, it's not the states, it's not the members, it's about the directors. Because the directors are fiduciaries and they've got substantial responsibilities with regard to the administration and policy, running the policy of these public retirement systems. And so the Nasra conference provides a singular, unique opportunity for these directors to get in the room together. They're among kindred spirits. We've got some meetings behind closed doors and some meetings that are open to others. But it's an opportunity for them to share stories and network and learn from one another.
And Alex, it's really a sense of comfortability here. People really feel comfortable sharing ideas. We're actually privileged as a show to be here because there's not a lot of press. I don't think there's any any press here otherwise than our show. So I think we're very privileged. We wanted to get your perspective about Nasra as well.
Yeah, I would share Keith's sentiments certainly, and to that I would add that as a director of a statewide retirement system, there are only a handful of other individuals around the country who have a role similar to yours. And that's what I think makes it all work, from a networking perspective. You are truly among a limited number of peers who are going through the same things that you're going through.
So I think, Keith, you mentioned we're in a highly volatile marketplace, retirement or stock market, global markets. You talked a little bit about some of the research. You're not in the business of prognostication, but we would expect this volatility to continue. We're in a lower interest rate environment that has an impact. Wondering if you would share, the landscape as it relates to pension reform. I know Alex mentioned some of the white papers or brief papers you've issued, but wondering if you could just kind of share topically what's going on around the country in terms of reform.
Sure. Really, the starting point of the public pension equation is the liabilities, the benefit promises. That's where it all begins. The money, the assets gets the most attention, but the assets are there for a reason, and they are there to pay the liabilities. And so ultimately, as interesting and sexy as the assets are, the liabilities have to be paid. And pension reform really is an issue that revolves around the liabilities and remodeling and recrafting those liabilities to make sure that those benefit promises can be honored.
And Alex, I know Janine's not here to talk about the legislative process, but really to kind of bring pension reform and changes, it takes a lot of logistics and a lot of working together, a lot of camaraderie, working with the legislature, potentially working with the legislature, as well as the system administrators and directors that kind of come together and figure out what is the right approach. And that can often take many years in order to kind of figure out what is the best direction.
So every state is different. Every state is unique with respect to the benefits that they offer, whether employees are covered by Social Security or whether employees are outside Social Security, financing structures for pensions, and the legal framework governing whether benefits can be modified or not. And so that's really what has reflected in the period of pension reform that we studied. Every state did it a little bit differently depending on their unique set of circumstances. Some changes affected new hires only, some affected current employees and new hires, current retirees, as well as current employees and new hires were all affected by benefit changes on the COLA side. So generally what we found, an overarching statement might be that pension reform was generally calibrated to individual state circumstances along the lines of those different factors that I mentioned.
I might add to that we have, as nearly every state in the country over the last 5 or 6 years has made meaningful changes to their pension plan designs and financing structures. We've seen the gamut of reform processes. From a very collaborative, where the retirement systems are involved and the stakeholders are involved, and legislators work with the retirement systems and the stakeholders to craft an appropriate solution. And we've seen the opposite as well, where literally the governor and the House Speaker and the Lieutenant Governor gathered behind closed doors over a weekend and cobbled together a pension reform. And the results were predictable, that in that particular case it didn't work. And predictably also we have seen much better results in cases where it's very collaborative and very well thought out.
Yeah, I think transparency obviously and openness is really what the public sector is about, so probably the best approach overall.
Another element of that as well is that there are multiple stakeholders in this process. It's not just about the taxpayers, it's not just about the public employees, it's about everybody who relies on public services, which is everybody. And it's important that all stakeholders have a seat at the table when pension reform and financing structures are being considered.
2016 is certainly an election year. You talked about the legislative process, and we've got a presidential election, but we really haven't heard a lot about retirement. And I often, read the paper every morning, and I also often wonder, can we have a national dialogue about retirement? Because we see around the country, and this may not be necessarily your area of particular expertise, but we see states coming up with ideas to cover people who are not covered. And it'd be great to have this national conversation about what it means to save for retirement, what it means to save for your financial future. And I'm wondering if this is the year that occurs. It'd be great to hear it from the candidates.
Yeah, it would be nice, but that doesn't seem to be on the table right now. Other issues seem to be overtaking it. But I think there's no question that, to some extent, the nation faces serious retirement challenges. Many characterize those as a retirement crisis. There's no question, the statistics don't lie, there's no question that a certain percentage of Americans clearly are unprepared for retirement. And obviously it's one of those issues that will be much easier to resolve if we get started on it sooner rather than later. Unfortunately, sometimes our nation has a habit of waiting to resolve problems like this. I remember when Congress resolved Social Security back in 1983, they were literally a week away from not being able to pay some benefits. And that's what it took, was really the crisis that was upon them to provoke them to actually reform.
Well, gentlemen, we thank you so much for allowing us to come into your conference and to speak candidly about some of the major issues. I wish you the best for this week, and hopefully you enjoy yourselves as well. It's beautiful Coeur d'Alene here, and you all have a great conference. So thank you so much for your time today.
Thank you.
Thank you.